Hello and welcome back. This is David from the Personal Finance Squad. Now we're going to get into section 12.5, Simplified Employee Pension Plan, otherwise known as a SEP. Now a SEP is a retirement plan, and that's offered by your employer, and that's where they make tax-deductible contributions. Now the employer, they benefit because they receive a deduction for plan contributions, and they are made on a discretionary basis. So as we've said with any one of these things, for the most part, there are the employer rules and how they want to distribute their plan out. Now, for contributions, you don't pay taxes, and they are only subject when a distribution is received. So this is like all the other retirement plans we've talked about. Business owners and eligible employees can participate. Now, the difference here is when we say participate, that means they have to have an IRA. So that means if you're going to be in a plan like this, you as an individual are going to have an IRA. And that's an individual retirement account, okay? So you create the account and the employer puts money into it. Okay, another thing here is that being that there's an IRA established by you, that means you have to adhere to its rules and not to the rules of the employer plan like a 401k would have, or the rules that are set standard rather by the government that the employee has to follow based on the employer's guidelines of how much they're going to match. So what we're saying here is that you just have to follow the IRA rules, which we'll get into in another chapter. Now, on another important note is that the contribution limits to a SEP are higher than a 401k or lesser than the 403b. So that gives you more room to put money into. And that's saying that's the lesser of $53,000 a year, or it cannot exceed 25% of income. Okay? So even if you made $200,000 a year and you wanted to put in 25% of it, that's 50 grand. So there's a lot of money to play with. Most people will never achieve this in a given year. Now, just on a side note, as of now, for the 401k in 2016, the max is $18,000 for a contribution. And if it's a catch-up contribution, which would be, catch-up is over 50, the max is 24k. So you can see there's a big difference in there. So if you happen to have a SEP and your employer wants to contribute to it, you have a little more latitude to put your money away. One last piece of information is that a 10% penalty will apply to withdrawals made before age 59 and a half. So there is a penalty as well for withdrawing. The government wants to make sure that you have your money put away, but they also want to make sure you start spending it too at a certain point. So that's going to cover it for the SEP. We appreciate you joining, and we will see you in the next video.